The allure of technology's disruptive potential has propelled tech ETFs to the forefront of modern investing. Among these stars, Vanguard's Information Technology ETF, VGT, shines brightly, holding a prominent position within the landscape. Yet, for the discerning investor, the question remains, is VGT the singular sun in the tech horizon, or are there equally radiant alternatives? This article delves into a comparative analysis of VGT, the ubiquitous QQQ, and the high-flying ARKK, exploring their similarities and differences in holdings, investment strategies, and performance to help you navigate the choppy waters of tech investing. At the heart of any ETF lies its composition. VGT boasts a behemoth lineup of nearly 400 holdings, tracking the MSCI US IMI Information Technology 2550 Index. This translates to a broad exposure across the tech spectrum, with heavyweights like Apple, Microsoft, and Amazon occupying the top spots. QQQ, the Invesco QQQ Trust, takes a different route, mirroring the Nasdaq 100 Index. This translates to a concentration in the top 100 non-financial Nasdaq companies, with tech giants again dominating, but accompanied by other high-flying sectors like consumer discretionary and healthcare. ARKK, ARK Innovation ETF, stands apart as a thematic play, actively managed by Cathie Wood and her team. Its focus lies on disruptive innovation, targeting companies believed to be at the forefront of technological revolutions, like robotics, artificial intelligence, and blockchain. These divergent approaches lead to distinct sector allocations. VGT exhibits a balanced tech feast, with software, semiconductors, and IT services taking sizable bites. QQQ leans towards internet and communications, reflecting the Nasdaq's composition. ARKK, meanwhile, champions healthcare, fintech, and consumer cyclical stocks, with traditional tech names like Apple and Alphabet taking a back seat. VGT embodies the passive investing philosophy, faithfully following the index constituents and their weights. This low-cost approach minimizes tracking error and ensures investors capture the broad market movement within the tech sector. QQQ inherits its semi-passive nature from the Nasdaq 100, automatically adjusting to company additions and removals based on market capitalization. ARKK, however, throws caution to the wind. Actively managed by Wood, it bets heavily on a small basket of high-growth, often volatile, companies poised to reshape the future. This high-conviction approach carries the potential for exponential returns, but also exposes investors to greater risk. Past performance, while not a guarantee of future success, sheds light on each ETF's track record. Over the past 5 years, VGT has delivered a respectable annualized return of 16.77%, outperforming the S&P 500's 14.28%. QQQ, mirroring the Nasdaq's tech-heavy composition, has posted slightly higher returns at 17.47%. ARKK, true to its volatile nature, has been a thrill ride, generating a stratospheric 53.63% annualized return, but also suffering deeper drawdowns. Looking ahead, predictions are inherently fickle. Analysts generally view VGT as a stable yet steadily growing option, benefiting from the overall tech sector's momentum. QQQ's performance is expected to closely track the Nasdaq 100, potentially outperforming the broader market if tech retains its dominance. ARKK's future hinges on its ability to identify and capitalize on the next wave of disruptive innovations, making it a high-risk, high-reward proposition. No investment is without its caveats. VGT's large size and index-hugging nature may offer stability, but also limit its potential for outsized returns. QQQ's reliance on a handful of megacap tech companies exposes it to their individual fortunes and vulnerabilities. ARKK's thematic focus concentrates risk heavily on a narrow pool of potential disruptors, amplifying both its upside potential and downside danger. Beyond risk, diversification plays a crucial role in any portfolio. While tech offers immense potential, relying solely on it can leave your investments vulnerable to sector-specific downturns. Combining VGT's broad exposure with the diversified S&P 500, for example, can provide stability and growth. Alternatively, a small allocation to ARKK within a well-diversified portfolio can add a touch of disruptive innovation. Choosing the right tech ETF isn't a one-size-fits-all proposition. Your risk tolerance, investment goals, and existing portfolio composition all play a crucial role. VGT serves as a reliable bedrock, offering broad exposure across the tech spectrum and steady, though not spectacular, returns. QQQ provides a concentrated lens on the Nasdaq's top dogs, ideal for investors seeking exposure to high-flying tech leaders, but comfortable with the volatility that comes with it. ARKK, in contrast, is a high-octane moonshot, a gamble on the future of technology with the potential for astronomical returns, but also the heart-stopping possibility of deep craters. Ultimately, the best choice isn't confined to these three giants alone. A multitude of tech ETFs, catering to various niches and strategies, populate the market. Consider exploring specialized options like Invesco Cloud Computing ETF, CLOU, or Global X Cybersecurity ETF, BUG, if specific themes spark your interest. Remember, diversification is key. Consider blending tech exposure with other asset classes like real estate or consumer staples to create a well-rounded portfolio. Beyond your portfolio, don't underestimate the power of due diligence. Delve into each ETF's holdings, understand its underlying index or investment strategy, and analyze its historical performance, both in bull and bear markets. Seek professional advice if needed, and remember, investing is a marathon, not a sprint. Stick to your plan, stay disciplined, and weather the inevitable market storms with patience and perspective. The tech sector holds immense potential, but navigating its volatile currents requires a well-equipped vessel. By understanding your own risk tolerance, exploring your investment goals, and meticulously comparing the diverse offerings available, you can chart a course towards capturing the opportunities that technology presents, all while keeping the winds of volatility at bay. In the vast ocean of tech investing, remember, the right strategy isn't about finding the lone star to guide you, it's about conducting your own symphony of choices, carefully tuning your instruments to harmonize with your financial aspirations.